Hey guys, welcome to this video. I did a stream this morning. Don't forget to check it out. My free training is underneath, as well as the link to my private trading room. So I'm going to cover gold in a full multi-time frame top-down analysis, if you like, because we're at very contentious areas and we're at decision time for lots and lots and lots of traders. And really getting this right and getting your size proportionate to risk in the market is essential, because you've got to remember where we are at the moment is right by our all-time high. And if you look at the spectrum of price movement over time, of course, gold generally accelerates in value, especially as the world develops. You can see we're well up 2029 at the moment. You know, even just at the turn of year 2000, okay, you've got prices way down at $270. So mass movement all the way up. And even in recent times, going from, let's say, in 2018, September, going from 1,200, you're now almost $1,000 higher, about $870 or about $830 higher right where you are now. So considerable move. You can see you've got various dips on the way up, but the point really is, after all those dips down, you've sustained the higher price and you're now nearing max value in terms of historical prices. Now, recently, or pretty much when we came to these highs, you'll remember, if you follow me quite closely, you remember I mentioned about it being short there because you had, an extreme price comes past this high. And then I mentioned about shorting it again here and here. And the reason why that occurs is because we're looking for probability via price action. In other words, something we've seen previously to happen again. And I also mentioned, just before you came up above these previous highs, that it was more than possible that would occur. It had every chance, and you shouldn't take these areas as the ultimatum. Okay, or in other words, you shouldn't say, okay, well, I'm going to short when we rise back here because there's no way it can go higher. So I mentioned about being short, but not treating it in the sense that, it's a given, okay, essentially, because it did go higher and it did give you the opportunity to reshort, which I mentioned in my updates as you spread out nicely with that candle wick. But the more you hit these areas, you've got to understand, especially on an asset like gold, where you've always broken the highs at some point, that can happen eventually. So it remains short, and you've now had your price fall. Now, this is quite common after you see these highs be made. You see these moves back, and what happens is you touch on to what we call early support. And early support comes more or less at the nearest point after you fall. Generally speaking, you would use higher time frames to reflect this. So the candle wicks, or the areas I've labeled, pretty much fall in line with your earliest point of rejection or your earliest point in the market where you rebounded. You can see I've drawn it there. And similarly, if you look to the right-hand side, you've got a candle wick there. And the most recent candle is pulling right into it harshly. And I mentioned this morning saying I don't think particularly that's going to hold. You've got a very full-bodied drag down here candle, okay, like this. You've got immediate rejection there. You've already hit this level twice before in very, very recent times. It tells you everything about, the potential that price could fall lower. Now, I had called it short on a retest or a retracement up within this sort of spectrum of the high, if you like, the distance between here and there. Okay, so you can see really pulling back into that has caused continuous weakness, and we're still seeing sustained weakness. Okay, so if you had it short, I would consider locking in your gains, because you're now going to get to what is going to be long territory and what is going to be further early support. And again, that is easily labeled by your higher time frame support, which I'm labeling now. If I go to my weekly, you can see it very clearly. Okay, and I often do this. I often refer to higher time frames to label it specifically. But you can see that's been a contentious area before, and hence, therefore, we can assume that you may find it's going to be a contentious area again. So everything around there gives you the fuel for what would then form a long zone, And that's why I said about holding your shorts, locking in gains. I'm not really interested in buying it now, okay? And I'm not interested in entering new sell positions, okay? Although I do think it will trickle down, because if I wanted to short, I should have done it earlier, okay? As I called on my posts. So not interested in shorting, just locking in gains, and they'll be taken wherever we go as the in-the-money trading stop, if you like, whatever sort of way you want to call it, follows. And you can see that ultimately we're looking at this point for exit and new entry to the long side. Now, any new entries to the long side are going to have to reflect this long-term market, okay? Because I expect ultimately further pullbacks, okay? I think it's a little bit overcooked, overdone in terms of how fast you've rallied. We've not the biggest pullback around this point. So I think ultimately you'll pull back further. There's a lot of strong support in the way that will probably sustain price. But if you had a massive change in market sentiment, the Fed said something really different, and they're teetering on it with Fed Goolsby's comments in regards to soft landings, things like that. You may find you get nearer to these key MAs quicker, and again, that would form my long bias for long entries. So really, if I wanted to sell it, I would need to see something rash, push it back up, okay? And then I'm looking into that question zone. I'm looking into that area where, you've got more or less no man's land, but you are able to refer off price action on lower time frames, and just generally, like I said, the spectrum of this candle wick. The length of this candle wick provides the area that forms rejection. In other words, where people have previously pulled their long orders and got short, and thus the market has therefore fallen. So, like I said, you would need a rash change in news to the up to pull that to the upside or the downside. But in either case, I'll be looking to attain market value short on a rise, and similarly attain market value to the long side on a fall, a key support. Okay. That is really how you manage those falls from highs. Thanks for watching. Don't forget to get my free training and join my trading room underneath. I'll see you in the next one. See you there, guys.